In today's news, in a shocking turn of events, the European Union is going on an absolute rampage, enforcing rigid and stricter regulations that spell trouble for every crypto asset in this space except those like XRP. Now, Europe already despise Bitcoin and have publicly disclosed on a number of occasions their unwillingness to adopt or even use Bitcoin in any capacity. And that is the nature of where this market is going right now. There is a general acceptance for what Bitcoin is and what it has done for crypto, but even as Franklin Templeton's Greg Scanlon highlights in this interview, Bitcoin doesn't have a layer 1 that can support any ecosystem at scale. It's not fit, therefore, for institutional adoption. Listen closely.
In this era, what happens with Bitcoin as an asset? Today, it is 60% of crypto's value is Bitcoin. So what happens with in an era where you have large-scale asset tokenization takes place? What is the role of Bitcoin in that universe?
It's a great question. And I think also your point of institutions moving from an era of proof of concepts, which I think dominated from 2016 through 2019, we have moved on to that, to where today you do see commercial grade products, and Bitcoin as collateral is moving in this direction as well. And so a part of our view internally is Bitcoin has won the first product market fit of crypto, which is as an alternative to fiat stores of value. There's no doubt about this, right? It's the number one market value. It's got the best branding in the world. What doesn't it have around it? It doesn't have an L1 that can support an ecosystem at scale, right? If you own Bitcoin, you need to have a certain amount of value that you're willing to transact in. Otherwise, it doesn't necessarily make sense for you to create that transaction or execute it. And so when we think about Bitcoin as collateral, and certainly as we have conversations with regulated institutions who now own it on behalf of clients, and those clients want the most efficient underlying asset that they can possibly own.
It is only a matter of time until Bitcoin's regulatory monopoly over this market becomes obsolete, comes to an end. The assets, therefore, with the real use case and, more importantly, the trust, will emerge victorious and become the next leaders of the crypto and financial age. And while Europe's policies may not be the ones implemented worldwide, they are the first movers, which gives them more of an advantage and a higher possibility, therefore, of shaping the entire crypto and financial landscape in their image, which is what makes this shocking update from the European Union so significant, as they aim to ban anonymous crypto and privacy tokens by 2027, which is only 2 years from now, by imposing even more rigid and stricter AML rules. So long story short, as this article highlights, the European Union has officially now passed the Anti-Money Laundering Regulations, aka AMLR, banning all financial institutions, banning all banks, banning all crypto services from offering anonymous crypto accounts or wallets starting July 1st, 2027. Which therefore means privacy tokens and coins like Monero, Zcash, and Dash, and many others will also be prohibited and become obsolete or be banned, therefore, which is bad news for them. The new rules require mandatory ID verification for crypto transactions over €1,000 and an established AMLA to directly oversee major crypto platforms. These updates, as we can see right down here, come as the European Union ramps up regulatory oversight over the crypto industry, building on previous measures such as the Markets in Crypto Asset Regulations, aka the MiCA stablecoin bill. Now, the way I see it, this does go against everything crypto originally stood for, freedom for the people. But as this space is evolving with TradFi merging with DeFi, the TradFi sector, they are used to doing things a certain way to provide their version of protection and oversight. To me, it also sounds a lot like Europe are trying to create one massive CBDCs of sorts with these regulations and policies, and there is a real possibility, therefore, because right now CBDCs are not really in the acceptance, if you will, it's a possibility these rules from Europe won't stick and Europe will be forced to be more flexible or risk losing market share. But once again, to highlight, with them being first movers, should these regulations provide positive results, other nations worldwide may also follow in suit, and this could spell disaster for many crypto assets being banned, the cannibalization of 99.99% of all cryptos. They'll be cannibalized and go to zero, but the ones that remain will gain significant market share and explode in value. As for the first time in history, all payments, every single penny in existence is moving to digital. Trillions are about to flood into this market, and you can capitalize on this market, learning much more here in the VIP group at wop.com/coin-factory. From institutional alpha research documents, trading educational courses and trade alerts, and there is so much more incoming that we offer. Also a limited time offer, 7-day free trial as well. So if you are interested, you find the link down below in the description. Come and check us out again, wop.com/coin-factory. Bitcoin's days, they are numbered, well and truly. Majority of cryptos have seemingly 2 years left now before they are banned, but this is fantastic for us XRP holders, as assets like XRP will emerge as a leader due to their use case, but most importantly, their trust, the legal clarity they have. In fact, as we can see from Smoke here, the Central Bank of France has explicitly stated a preference for using XRP as the basis for issuing a digital euro, which is extremely bullish news and proof that Europe backs XRP. There's a reason also why the likes of Christine Lagarde, the European Central Bank president, highlights the cannibalization of crypto is incoming, but institutions or assets or industries like Ripple and XRP will emerge as disruptors. XRP will be the one to cannibalize them all, Bitcoin included therefore. Take a listen.
The difference will not be between those who are disrupted and those who survive, but it will be between those who are cannibalized because they are not seeing it coming and they're not embracing it, and those who self-induce that cannibalization. And I'm using cannibalization on purpose because it's a bit of a striking, horrible word. But it's really what it means. It's you're going to disrupt your business model, you're going to change it, you're going to reduce your cost, you're going to expedite your transactions, and you're going to continue to inspire confidence because you will build that on the basis of an existing backbone, which is your bank and the confidence relationship that you've established with your customers. So that's where I see changes happening now. If you think of Circle and Ripples and all those, that's where they are active and helpful.
The truth could not be more obvious to you. They're telling you what's going to happen right here and now. The financial system is evolving, and either you are working with the system or against it. Either you gain the market share or you won't. Either have an MTL money transmitter license like Ripple and XRP do, or you don't. The winners are clear. You're either ISO 20022 compliant or you are not. And as you can see in this long post here from Smoke, this document here highlights that as many banks are now struggling to keep up with the rapid changes in the payment landscape due to outdated technology. SWIFT, therefore, ISO 20022 is literally forcing the banks to modernize their systems with distributed ledger technology, DLT, with institutions, therefore, like Ripple with XRP. We are truly blessed. Europe's going to ban all of cryptos except XRP. We are truly, truly lucky to be here when XRP is still below $3. And even then, some of us have got in before 50 cents. We got in so early. For the first time ever in history, all payments are moving digital, and Ripple partner Finastra highlights in this webinar here, and its assets with ISO 20022 compliance like XRP, which will gain significant market share.
For in our industry, it's probably the wrong way of looking at it. I think the real issue that we have here is it's a very profound change that we're going through, and it's a great time to be in payments because there's never been a time before in our industry where we've moved from analog payments, because that's what everything has been before, to digital payments. And instant payments around the world are pretty much all now being deployed as digital instant payments, and that makes a huge, huge difference. And I think, therefore, that paradigm is probably the most important thing. We talk about instant payments, but actually, if you juxtapose the two, we're really talking about the move from analog, as I say, to digital. And that is the most profound piece.
The cannibalization and banning of crypto is not far off. this may be the last cycle in the sunlight, a cycle that Ripple and XRP most definitely are chosen to dominate and explode much higher in value. After that, Ripple and XRP will take them, the other assets, for everything they are worth, exploding much higher as a result and snowballing further and further and further and further. And stablecoins will also play a big factor into this as well, once more bringing more use case to Ripple and XRP as a payment powerhouse. We can see already the absolute massive surge in stablecoin volume that continues to rally higher and higher. Last year in 2024, there was 2.5 times higher volume of stablecoins than it was with Visa, the largest payment provider in the world. Absolutely insane stuff, and we can see the volume has not stopped gaining more and more momentum. This volume is only going to explode much further and massive, potentially a absolutely parabolic spike with the incoming regulatory frameworks, to which we have just received huge confirmation here from the former Fox Business journalist Eleanor Terrett that the discussion draft for a market structure bill, which goes hand in hand with the stablecoin bill, has just been dropped from the Senate and the House, which is huge news. These regulations will also massively benefit XRP and their RLUSD, seeing more adoption for the stablecoin and therefore more demand and higher price for XRP. And we do not have long left until we see this massive explosion in adoption and price. As Chad highlights here and posts Congress's timeline, we have limited time to pass the stablecoin bills into law. Ideally, we could see it passed by the end of the month, by the end of May. But knowing our luck, and with the Democrats right now still doing everything in their power to delay due to their personal vendettas against Trump, it will likely take a little bit longer than May. But in saying that, only 2.5 months from now till July 24th is how long we have until we will end up seeing institutional capital being given the green light to size into the market, and for XRP therefore and RUSD to see more volume and explode in value. Europe's on a mission to ban everything that isn't XRP, so XRP could see even more adoption this cycle as people decide to steer clear from those who are not chosen, like Monero, like Zcash. This is a very shocking update, but a real one that you cannot ignore because it has very, very big implications for what's coming to crypto in the near future. Come learn more though in the VIP group, and as always, don't look short term, think long term, and I'll see you in the next one.